Hello, everybody. This is Drew Demon, and I'm jumping into AMC's chart to call out something that I just noticed while I was doing just a little bit of technical analysis. So, recap on what AMC's done very recently. AMC sold off and broke through this wedge that it had formed after it moved up to its largest peak at $72.62. It's been in a falling wedge ever since, and not looking too great as of recent. Um, People have heard me call out several times that there have been these peaks and plateaus in the OBV that showed up, which, if you're just coming into one of my videos for the first time and don't know what OBV is, OBV is on balance volume, where green volume candles increase the OBV and red volume candles decrease the OBV. It's basically simple addition and subtraction, and the theory behind it is that it displays on balance how many buyers versus sellers there are. Whenever there's some kind of divergence in the OBV, where the OBV is rising while the price is falling, it's considered bullish divergence in the OBV. Um, and I've explained this in more detail in other videos of mine, so you can check that out if you want to learn more. But basically, the point that I'm trying to make here is that these significant rises in the OBV during these squeeze periods result in a plateau in the OBV where there's not much buying or selling going on. And the reason for that is because there's huge amounts of volume to the buy side as the price rises. And I know this one looks red, but the price increased. So um, it was because of the huge gap up that happened pre market that caused AMC to rise this significantly. But in any case, what we're really looking for is that the OBV rose, and then despite the price falling and kind of just massive sell off, the OBV didn't move. And I've talked about how this is an indication that algorithms are playing with the stock and trying to manipulate the price in order to use retail as bag holders and convince them to sell their stock at the lowest possible price while algorithms accumulate these shares. So, this is a very effective strategy that's worked for them for decades. Ever since computerized trading and quantitative analysis has been proven successful, this method has been used. What we notice is that just before these squeeze periods, we'll have a bump in the OBV where the volume returns and the price starts to climb just a little bit. It's not much. It's not as significant as you might think. But these 20% moves after it's bounced off of its support has been a pretty bullish sign. It happened back here in January. If we look at how AMC had sold off to its worst price in its history, it had this long, pronounced sell off period, and it spent so much time oversold on the RSI until it hit its low point at $1.91. This low was the worst of it. And then as soon as volume came into it and the price started to rise simultaneously, the OBV started to rise and it resulted in a peak and then a very short sell off and then the meteoric rise to $20. Zooming into the pre squeeze event that I called out, I think it was back on May 25th when I called out AMC was going to squeeze, and we had this candle, this big green candle, where we moved from $10 all the way up to a high of 14.20, and we stayed on that trend. We sold off a little bit and kind of leveled out. It was a really short term wedge pattern that you can't really see just because we're on daily candles, but this was a bullish pennant here. And we noticed that the OBV had this big hill in it that had formed, and it was right after it had fallen off of this deep wedge. This wedge was significant. this actually means something extremely important because AMC had previously formed a wedge here, right? And everybody was watching this at the time. Everybody was saying, "Oh, this is the bounce. This is it. This is going to be the big move." And then it collapsed on itself and fell back down below $9 and everybody at that time was really banking on a recovery and it looked like the whole play was over and the FUD train was out in force and it was just pandemonium. But when we bounced again, we formed a new support at a previous support here. And I'll draw this very quickly and then take it away. But we bounced here at this support twice. Now I'm going to show you something that I noticed while I was comparing these charts to the past. I'm going to turn this into a big red support so that we can see this very clearly. And I'm going to extend it out here. This chart from our fall from grace from $72.62 bounced perfectly off of this trend line. And that's extremely interesting and significant. And I notice now that the moving averages are kind of doing the same thing where they're beginning to close into meet and it's looking like it's going to it's looking like they're going to cross here soon, which would be a bearish signal. But for just a moment, I want to briefly look at what possibility we may be looking at if I were to draw an extended ray here. If I were to follow the peaks from the squeeze, what I believe is happening is we have a megaphone that's formed here on AMC's daily chart. And I believe that we've formed an entirely new pattern based on a Wyckoff accumulation. I'll make this even bigger so that everybody can see this easily. AMC is doing the same thing that it did in this brief period where it was rising and tried to make a jump over its descending resistance in a bullish pennant, a very long bullish pennant. And then as soon as it touched it, it collapsed in on itself, fell below its support, and the sell-off was so extreme that it nearly resulted in mass panic. But you notice that the OBV only slightly dropped off. And as soon as the price started to rise again, the OBV spiked significantly. This is what I'm staring at to happen here soon. Because the day that we just had, is proof that this isn't dead. And the volume just started to peak again. The volume that's coming into AMC is significant. And this bounce here, it's significant. If AMC is truly following this trend and that we are actually looking at this extended megaphone, then anywhere from now to the next 6 months, between now and we'll say May or June, could be seeing anywhere from 160 to $220. Now, obviously, this isn't financial advice. I'm just drawing charts here. This can't predict the future. This can't tell you what's going to happen. This cannot guarantee anything. And that's not what any of this is. But given what we've seen over this past year in this fight, the manipulation and the negative press, mainstream media coming out to attack us and make examples of us, hedge funds unifying their resources in order to kill retail on major squeeze plays, looking for any opportunity to demoralize and humiliate us and discredit us. And now suddenly we're starting to see a move again. And believe me, there are institutions that know what is going on. There are institutions that are not, that are aware, but will never reveal. They will never show their cards. This is a game of poker where all of the big players have millions of chips. Retail has thousands. And the hedge funds are all looking at our cards. They can see all of our plays, and they can see the looks on our faces. They can see our tells. They know everything about us. The only thing that we have done in the last 40 years since computerized trading has made this possible for retail is that we hold and don't show fear. Solid, stone cold poker face. It's my belief that we're going to see a huge move here very soon. This chart is extremely encouraging to me. I'm looking for the OBV to start showing a rise. The MACD is about to cross, and at least in the short term, it would appear that we're about to break the bear trend. I'm expecting we might see some negative price action here before the close on Friday. This could just be a little bit of hopium, I don't know. But I do at least have some confidence that this turnaround isn't coincidental. There are hedge funds that have been naked short on AMC stock and GameStop stock as well. And this trend, this repeated pattern in price action of AMC squeezing and forming a bullish pennant 2 times in a row with the OBV meteorically rising and then plateauing solid, just doesn't move from its high point. That's not coincidence. The fact that the OBV now at a price of $30 is the same as when we were at $72 is extremely indicative that there is accumulation happening. Hedge funds want shares because they don't have a choice, and they want them cheaply because they need to survive. They are wounded beasts, and they are extremely dangerous. But there are tells, and I believe that this is a tell. I'm going to be carefully watching AMC's chart going forward. I'm going to watch very closely what the short exempt volume is doing and what the short exempt ratio is looking like here in the near term. And I would encourage everybody to just keep it up. These guys are in pain. They have been unable to convince retail to leave and just go away. And every single day that we stay here, we're costing them millions of dollars. They are being bled dry. The only thing that's going to finally put the last nail in the coffin is when they've hit their deadline. They have no money left. They have no options left. They have no friends left. And nobody will bail them out anymore. And when the truth comes out at the end of this, and the government has to decide whether they're going to bail out the American economy by what they believe is the right course, by donating funds to these massive corporations and hedge funds, I anticipate that retail will do something about that, that we will have something to say about that. And I hope that that's what we see at the close of this business when this is all said and done. Thank you so much for watching, and have a hell of a time in the markets.